Good morning. It is Friday, October the 16th. This is Todd Miller with a quick update. What I wanted to do is go over some numbers that I just got with what's gone on in Vegas in the last 5 years, specifically in the higher end. You know, those $1 million and above properties, got some interesting things happening. One of the questions I always get is, you know, it's a general question. It's Todd, how's the market? You know, and that's kind of a very broad question because it depends on if you're buying or you're selling or you're investing. And it could be different. It also depends on what price range that you're thinking about purchasing in. So let me give you some numbers to show you what's happened over the last 5 years and where we've gone and what potentially we have to look forward to in the future in the real estate market in Las Vegas. This month in 2005, the median or the average purchase price of a home was $360,000. That was kind of when we were at the top of our market. You know, we had just had the big run up, a 50% appreciation, and you know, homes didn't stay on the market very long throughout that time. And our inventory started to build, and then it built throughout 06 when the average price actually went up to $375, and so it looked like we still had some appreciation. But what we saw was this building of inventory. You know, the listings passed 20,000, then 25,000, then they started to get to 30,000. In 07, we still had $350,000. We had actually started to see these off, and the reason is because we started to see the REO come in. And when the REO came in, it did add to the inventory, but it came on at a lower price, meaning the REO sellers were tending to price it below what the other sold because they needed to move this inventory, and that sort of triggered the downfall of values. We saw a lot of REO continue for the next year. A year later, by last year this time, we'd gone from $350 all the way down to $230. So we lost, $120,000 of value per house just disappeared in a year. So 230 is essentially where we were, 6, 7, 8 years ago. And a lot of people are saying, whoa, that's crazy. Well, in the last year, we've gone from 230 to 168. Now, that's another substantial decline. Our values now are less than half of what they were worth just 3 years ago. But there's good news. The good news is that over the last 5 months, that average has not changed. It stayed right around 170. It's been 165. It's been 172. In the last month it was 168. We're seeing the stabilizing effect right at the bottom of the market because there is a floor at which buyers are willing to pay for a property. I mean, there's a floor which sellers won't go below, and we've sort of reached that. It's sort of like the equilibrium price for your basic house. Now, those numbers are a little skewed because those of you who are trying to buy a house, or those of you who are real estate agents, realize that there's, as soon as a house comes on the market that's decent, that's in good condition, that a person can get financing on, there's a bunch of offers, the thing gets bid up, and a lot of people are saying, oh, prices are going to come up, they're going to come up. Well, we haven't seen that yet on the average. One of the things that we've seen that's really interesting is what's happening on properties $1 million and above. $1 million and above is a totally different marketplace. Right now, currently, there are 725 properties that are $1 million and above that are available to purchase. 725. Now, if you live in Southern California, you're thinking, hey, that's not a big deal. Well, it is here. 725 is a lot. The key is, in the last month, we've only had 15 sales of properties $1 million or more. Now, if you do the math, that's 48 months of supply. That's 4 years of inventory. A lot of these sales are also homes that were like at one point sold for $3 million, today they're selling for $1.5 million or something like that. So even within that range, you're seeing a lot of downward pressure. Take it for what you will. To me, what that means is anytime you see more than about 8 months of inventory, that tends to mean prices will drop in the future. Anytime you see less than that, it tends to mean prices will be stable or potentially appreciate. 48 months of supply in properties over $1 million is pretty substantial. The real interesting one is our vertical high-rise condo, luxury condos over $1 million. A lot of the condo complexes have been hit pretty hard. Some of them haven't finished, some of them completed, but then they have empty buildings. And really interesting here. Okay, condos, high-rises over $1 million. There's 85 on the market. Okay. In the last 6 months, there have been exactly 3 sales. So you've got high rises over $1 million, 3 sales, 85 properties in inventory. That equates to a 12-year supply, which to me means that's a high potential for those values to come down. There's something that's going to have to give. Clearly, the sellers won't be able to hold out for 12 years. So, keep your eye on that market. If you're thinking of purchasing in that range, just get together with your agent, talk about what you think a good value is. As with anything else, don't take general numbers and try to assume something, and don't take specific numbers and try to assume something as well. Take all the information. If you think you're getting a great deal on a house, you might be, and that might be a good purchase for you. But what I see is some potential depreciation in that range just strictly by looking at numbers. I think that's reasonable to assume. That's my update for today. I'm going out this weekend. I'm in a whole bunch of properties that are brand new REOs in our inventory. Going to get some good video of them, and they might end up being a good investment for you as well. They are in the lower end, so they will be ones that fly off the market. That's the update for today, and I look forward to the next one. Thanks.